Well, here we are. Welcome, everybody. Thanks for tuning in. Thanks for joining my live stream. This time, the earnings report of the Q3 2025 for NIO. And I'm just opening my screen here. I'm running late. So I was surprised that NIO earnings came out a bit early today. Usually it take some more time. Let me take some time and invite people. Join me for a NIO Q3 earnings live stream. Meanwhile, you guys can tell me whether or not everything's okay with the sound and the picture. There we go. All right, let's jump in. Here's the headline. NIO misses Q3 top line estimates, gives Q4 outlook. So we're going to discuss how this actually aligns with what investors out there were looking for, and also my personal estimates versus what has been reported. Actually, I had only a little bit of time to dig into the report by now. Yesterday, I was actually talking to the Patreon community here that I go and say we will be below 500 million net losses and that vehicle margins could be higher. And I'd expect the average selling prices to be up. So that's something that we can look into. As always, I have my little business case, which I'm updating and giving you basically how this is matching with my personal estimation. So that's what we're going to do in this video. Later on, I have a second live stream, which I think is coming up actually in 15 minutes already with the earnings call. So that's going to be a separate stream. As always, if you tune in regularly, you know the game, 2 live streams with every earnings report. And as always, you can comment if you are subscribed to this channel for more than 1 year. So I highly recommend that you hit the subscribe button if you haven't done that so far. And other than that, we'll go through the report, but maybe first through the estimates. So here, what have the analysts seen for the earnings? I think, interestingly, more than 500 million in net losses. So maybe there's also why NIO is currently green in the pre-market, something very, very rare for NIO earnings, right? And overall, like I had a quick view at the report already. It looked really surprisingly good. That was basically my first take, but let's look into the details now. So basically, they reported 2.7 billion in vehicle sales, vehicle margins at close to 15%. So that should align with my thesis that we see actually higher vehicle margins than most people may have been looking for. And the net loss comes in at, ta-da, less than 500 mil. Very close. But we got the 4 here, so that's making me happy. As you can see, the net losses have come down significantly. That's really good. And this one is a surprise to me. The cash, 5.1 billion. There's something that I've missed. That I can tell you. Well, maybe let's jump straight into my personal estimations to give you maybe a little bit more clarity on what I was expecting and why I think this report seems to be largely in line with that. So here are my estimates in red. So this part is what I've been estimating. And that one, has been high on the vehicle sales because possibly I've been too high on average sales prices. As I said before, I expected margins to go up, like the vehicle margins, and the average sales prices to go up. And maybe a bit too in my estimates here. So I thought we get much higher vehicle sales here, but in general, the other sales have been pretty much aligned. So that's okay. I've been assuming 16% in vehicle margins, and I think that might have been very optimistic, to be honest. So generally, I wanted to make the point that I think the vehicle margin could come in higher than what people may be thinking out there, and I think that's largely because we now get to more lean production in terms of we have the model line up, and they can really focus. They have got some well-selling models like the NIO ES6, and they have the Onvo LS60 doing more, and the L90 as well. So that's bringing a bit more clarity into the supply chain, into manufacturing processes, and with that, I expect margins to go up. And I've been kind of holding NIO a little bit accountable here for what they expected going into the year. Like they were guiding more towards 20% vehicle margins by the end of the year. In recent earnings calls, they've been actually dialing that a little bit back, but still, I was thinking, okay, let's go with something that is much better than what we had in the last quarter, which was, the actual of 10% of vehicle margins, which is pretty bad. And now 16 on my side was a bit going out too far here, but with 15, we almost got there, right? Or 14.7 for me, that's 15. It's a really good vehicle margin here, and I think that might be one of the positive surprises here. I'm not sure if they're mentioning that in the Seeking Alpha article, which generally gives you the headlines, right? So they say they missed the top line estimates. Yeah, so they possibly also expected more revenues coming in. Misses by 80 million, but yeah, the vehicle margin is in there as well, which is pretty good. So yeah, actually that's lining up pretty closely with my estimations here. Then on the gross margin side, I'm also too high generally. Because I was expecting the other sales to be a bit more profitable. I guess that's the reason. It is still profitable, so everything that's going into other sales, which we might hear more about today in the earnings call, because recently we have the reports about also some R&D fees going into that possibly. But nonetheless, what's also going in there is NIO Lifestyle, stuff like the battery swapping network, the fees that are charging, and all of that. So it's a pretty good sign that this is now sort of consistently in a positive realm. Although I expected it to be a bit more positive, to be honest. And then yeah, I mean that's been a real banger here. I need to double check this number because this is fantastic. This is R&D development only at 335 mil. And we haven't seen such a low number for a really, really, really long time. This has been consistently trending over 500 million of R&D. So let's look into the specifics in a second. But that has been even lower than what I estimated here with 400 million. Then my SG&A has been pretty much aligned. So overall, the operating expenses have been quite similar. And I've been aiming for a net loss of 429 million, which I thought, like even in my Patreon community, people have been, more looking towards 500 mil plus in net losses. I thought I'm definitely going to be on an optimistic side, but the fact that we got there actually and very, very close to my net loss assumption is really encouraging, I think, and that's a positive surprise from on my behalf here, how I'm seeing it in this report. And then I've got a huge gap here. I really need to double check. I must have forgotten something, possibly around the capital raise that I didn't factor in this time, because we're landing at 5.1 billion in cash currently. So that's a much higher position than I'm estimating here, which is obviously also a very, very good thing. I imagine that NIO is becoming more cash flow positive, so that with all of the cars that they're selling, and maybe they have paid lots of suppliers already in the beginning and so on. So, that's evening out now and getting NIO more cash in the banks. That's just my suspicion here, but maybe there's more in the report, which I actually didn't fully read through as of now, but so we can do that together now. But as you can see, these are largely my estimates and pretty much in line. And so the fact that my estimates have been quite on the optimistic side and now almost met is actually telling you all you need to know about that. This report has been really, really good in my opinion here. I guess if we go into the details, we'll find some negatives as well, but overall, this seems pretty much in line and good. So what else? Completion of the equity offering, 1.16 billion. That's possibly what I did not factor into my Excel sheet. But even if I add another 1.1 billion, for the capital raise, that's still a delta of 600 million, right? Or 0.6 of this cash report versus what I would have estimated. So yeah, I did forget about this cash raise, but it's still telling us the story here that NIO has become much more cash flow positive. At least they're getting money coming in, which they can then use for other things, versus in the past where they just had outflows and spending and stuff. So that should be, yes, pretty good, I would say, or some reason to relax, because obviously this stock and this company has been viewed like from bankruptcy concerns or people really not only hoping for profitability, but kind of thinking otherwise this company would be a going concern and would not make it. And with that much cash in the bank now and with these positive metrics so far, I think that should really relieve some of the pain out there and hopefully also become more attractive to some of the institutional investors, which are generally less risk-taking, right? Okay, that was the remarks around the equity offering, which I have also discussed on the channel. So I guess there's not much more to say. Maybe later on in a Q&A section, I can happily take your questions. Issuance of share incentive plans. Okay, so that's okay. That's just for the employee stock option plans. Let's see what the CEO and CFO are commenting. In the third quarter of 2025, the company delivered 87K smart electric vehicles, representing a year-over-year increase of 40%. I think that's really nice to highlight because, I mean, most of the other companies, including Tesla, don't even have year-over-year growth currently in this market. So it's quite strong. That's startup numbers. The strong momentum was driven by the all-around competitiveness of our NIO, Onvo, and Firefly brand offerings, which continue to resonate with users across their respective market segments, said William Lee. We are working closely with supply chain partners to ramp up production and expect total deliveries in the fourth quarter to reach between 120K and 125K. So I guess, and I saw some comments out there, this might be a talking point that they're guiding for 120 to 125K, which may not be as strong as what people would expect at this point in time, especially that the current ramp up has been impressive. But I always said, like, the danger might be that they will hit some limitations with supply chain or something goes wrong, and then those targets can, quickly deteriorate. And I think NIO has put those targets at 150K before, right? I never bought into them, frankly. I think if I look at my personal estimations, so these are my full year new estimates. Actually, for Q3, I had higher estimates than the actuals. So yeah, only like a couple of thousand, but I thought we land over 90K. But for Q4, my estimations have always been pinned to less than 130,000. So overall landing at somewhere between 330 to 340,000 for the whole year. I think that's still realistic, and I think we could totally still get to 128, even though they are now going for 120 to 125. I think there might be either they see something like in production or they're sandbagging. One thing could be the relaunch of the ES8, which I think has been now postponed into the next quarter, or possibly the next quarter, but at least into 2026, which may add another manufacturing increase. The way I see that is, that would have possibly brought in more volume, but at the same time, if they can prioritize onboard production instead, that should give more volume as well and makes it less risky for ramping the supply chain, because it's basically just churning out what they're doing already and not introducing a new model to market. And it's actually quite nice to have the ES8 launching in next year, I think, because as you know, we're then about to enter the seasonality, which is weaker. So to have a real catalyst coming up next is actually quite nice to have, in my opinion. So yeah, I think we still could go towards my target, like the 128K. And I'm not sure whether or not they cut the 150 down to this outlook now because of the fact that they're moving the ES8, the new delivery. Well, what else can we say? They're talking about a continuous cost optimization and greater contribution from higher margin vehicle deliveries. Our sales gross margin sequentially improved to 14% in Q3 2025, and the overall gross margin reached the highest level in the past 3 years, underscoring the enhanced profitability of our products and services, added Stanley to NIO's Chief Financial Officer. Our continued efforts on operational efficiency and improved across R&D, sales, and service also drove the quarter-on-quarter reduction of over 30% in non-GAAP operating losses. Yeah, people were asking like whether or not we see those improvements actually right now, or it will be just Q4, a big bang, and all on a sudden implication on the balance sheet and the financials. I always thought it would be more gradual, to be honest. So going into the year, I've been wrong on how fast they may actually really reduce the cost and such. But now it's happening. Continuing the positive trend from the first half of 2025, furthermore, the business generated positive operating cash flow and positive results of operating cash flow net after capital expenditures during the quarter, bolstered further by 1.1 billion equity offering. Our strengthened balance sheet provides a solid foundation for the path forward. Okay. So yeah, this is really great news for NIO investors, I think, and will be generally, hopefully, it should be well taken by the market, because it really is a much stronger balance sheet, in my opinion, than possibly everybody has expected. Plus, landing below the 500 million in net loss has been actually a further reduction already than what most people out there were thinking. And then the fact that on the one hand side, there are, a bit more conservative on the Q4 volume guidance is, I think, being weighed up here by the fact that they are already further in the cost reduction and profitability metric than what people may think. Because I think what's happening after this earnings is that people will find it more likely that NIO is able to improve the vehicle margins further and have their cost in control. And that was, I think, a big question mark going into this quarter and going into the Q3 earnings, and then also for Q4 in general. So that's why I'm not so concerned about a sort of lower guidance here, because what I've been actually stressing on my previous live streams as well was that I think with that sort of a volume, it would technically be possible to break even or come very, very close to break even if the other metrics are in place. And what NIO basically is doing with this report is, yes, they're guiding lower, but instilling more confidence in actually the profitability metrics that are mattering. So that's why I'm really not concerned with this outlook, and find it still a rather good report based on that. All right, what else? Let's see if there's anything mentioned in other sales. Speaking about the decrease in other sales over the second quarter of 2025, that was mainly due to the decrease in revenues from sales of used cars and technical research development services. Okay, so this time there was less R&D and tech development services contribution going into other sales, which is interesting because it is still doing well for all of the other things like the after sales services, power solutions like swapping fees and that and so forth, and highlighting here the number of user growth, which means that currently the other sales profitability, which it is, right, they're in the green on this line, is not driven so much by R&D solutions right now. So that's cool. That's actually also a really good takeaway here, in my opinion. Now the R&D part is super interesting, down to 335 million. That's the largest decrease. Mainly due to decreased personnel cost, organizational optimization, and decreased design and development costs resulting from different stages of development for new products and technology. So finally, the personal adjustments are making an impact here. And it makes sense. The question is now, what they are still able to do with that. I mean, the model lineup is sort of finished for now. Now they're doing iterations, which might be easier to do and also with less capital. So that's good, but obviously they also don't want to starve themselves to become less innovative. That would be a risk, but I mean, we should be happy to seeing that they have now a much leaner organization in this regard. I think there have also been, challenges and problems with the R&D expenses in the past in terms of what the outputs were. Personally, I'm, let's say, a little bit critical about the stage of Nomi. We can talk about that in a second, because Nomi is in a sense also NIO's way into the robotics field, and I think smart assists with LLMs and stuff are showing much more progress recently than what NIO has recently done. So that's one part where maybe R&D wasn't too good recently on NIO's part. The other part is they let go some of their research team about autonomous driving. So I think they still have like a really good base with Ren Xiaoqing and the NIO world model and all of that is really, really exciting. But in terms of implementation and operation, they have been really with some problems and not leading. And I think that's an issue for NIO. And that might be one part where they also have been cutting. I cannot imagine that they are cutting too much on the actual engineering side of the vehicles. Maybe some parts maybe becoming more leaner, yeah, but overall this is where I think they have excelled. The cars have always been stunning and really, really good, except for a couple of mistakes on the car level, which have also been taken, right? But yeah, overall that has made the biggest impact. And the question now is, can they hold this level? I think that might be an analyst question coming. And if they can hold this level, what will they be able to do with that? Now, SG&A is still quite high, and something that's sort of to be expected because if you're selling more cars, then you also need to have more sales and marketing initiatives. But it is not going much up, and it's the metric that I'm watching always is this SG&A per vehicle sold. I was estimating that it could be around 6,000 USD. So basically taking the SG&A cost, dividing it by the vehicles sold. And that has been historically much, much higher, and it's trending down. There should be a chart somewhere here. Yep, here we go. I haven't updated this one, but this is coming down from a very high base, and it's been more than 10,000 USD even in recent quarters, but now finally coming down, and that's a level where it should be, and it's also an indicator whether or not they can actually manage to get this operational efficiency and the leverage there to sell more cars without investing much more money. And they're doing this on a per vehicle sold basis now, because also the actual coming in a bit high, but that's still good. So holding the SG&A part at these levels, we'll have the slight increase. Is it an increase compared to the last quarter? Yeah, slight increase, I think, is fine. Overall, still the operating expenses come down. So the operating leverage that they're having here is mainly coming from the R&D side. But yeah, overall, that's pretty good. So now most of the stuff is complete in terms of R&D. They have the chips, which need ongoing iterations. They have most of the model lineup. We'll have some more models with, like I said, the 2026 launch of the NIO models that are coming. I think I said the ES8, right? The ES9, I'm meaning. But anyways, my point being is like they might be able to do all of these more incremental updates now, also with less cost, and like there's also cost going into the testing of these vehicles and that sort of stuff. So they had a really, really fast cadence recently with the with bringing out new models, and that was costing them a lot, I guess. So that's the report. Maybe something I missed, let me know in the Q&A section, but that was going over my personal estimations versus what I'm seeing in the report. Again, if I was summarizing it, I've been on the optimistic side, and that optimistic side has been nearly matched. The only negative that I see in the report, which is not a negative for me, because I've been in that camp already on my estimations, is the Q4 outlook. But I still think with that outlook, given the metrics, the profitability metrics that I'm seeing in this report, it might be possible to break even in Q4 or coming very, very close to it. I'm very, very sure that if they meet even those metrics, and I think there's even the possibility to exceed that metric of 120K, that they will show significant improvements again on the financial part in terms of margins, and the net losses coming down even more. Yeah, so overall, I'm happy with that. Let me know what you think. I don't know what's the market doing. Yeah, it's not showing too much of a sign right now. I mean, currently we also have to wait for the earnings call, which is coming up, I think, in 20 minutes. Usually they are a bit more decisive for what's happening in trading today. But no matter the market reaction, usually we get sell-offs after new earnings, but no matter if it's green or red, I have to say that it makes me personally a bit more confident in NIO achieving their long-term strategy and goals, and that this was a good quarter in my books. And I think it could have been way worse than that. Obviously, there are still, despite a very good cash balance right now, there are still concerns around NIO. So we're not out of the woods yet, even if they are meeting profitability targets in Q4. Then we will still have discussions around 2026. But like I said, 2026, we will get some pretty nice catalysts, which they're still moving in there. Overall, that's why I'm talking on my videos more on the meta level currently, because I'm not too much about the deliveries and that sort of stuff at this current point anymore. Certainly not the weeklies. I think 2026 could be shaping up to become a really game changer year for NIO again. Not because of a potential break even in the fourth quarter of 2024, but 2025 in this year, but more because I think they could finally start looking into the future. And the financials are one part of them. As I just said, like with this report and everything, the direction it's going, it will make it more easy for NIO to focus on other stuff than only just the financials. I think they can hopefully show something exciting on the tech level when it comes to, first of all, battery swapping and the partnerships, which are still in a black box. And we don't really know exactly when we will see those partner cars. We don't exactly know how the fifth generation swap station will be looking. We don't exactly know how the CATL partnership is coming to fruition. That sort of things I think will mature in 2026, and I think there might be some really interesting game changers aligned with that. Plus, all of the things around chips in general, what's happening in China with domestic chips manufacturing, plus NIO's abilities there of producing the Shenzi, but then also bringing it into their cars and possibly also into other players. We recently had some news. I need to still make a separate video on that specific topic, but that's one other thing. Then chips, then robotics, the NIO world model on top, like everything that's happening in AI with this company. So this company has all of the potential for it. They have the chip, they have the AI, they have the the models, they have the NIO world model, they have the manufacturing processes and everything necessary to also do something in the robotics space, which I think they will announce a really NIO specific angle of going in there. But as far as now, everybody's just watching the financials and the deliveries. It's nothing to talk about for now during this year, except for what I'm doing on the channel, because I'm maybe a little bit more forward looking here. And I guess this is what this report could do also for the analysts and the institutions, that they also start taking a little bit of a longer look, possibly also helped by potential rate cuts, which currently the market thinks they're off the table. That could turn around quickly, and if so, then this will really help people focus more on the long-term prospects of the outlook here of NIO. Yeah, Andrea talking here about the NIO Power Day, or some new tech innovation day, something like that would really be really nice. But I think something like that is coming in 2026, and it might be really coming in conjunction with what's generally happening. I'm really doing a lot of deep dives into the robotics space in China currently. It's really having a great couple of weeks currently, so it is very exciting. Plus, on the chip side, I expect major news in 2026 from China in general. But then it's really interesting what NIO's role is in there. Currently, we see Elon Musk talking a lot about chips and what Tesla is doing. And in my last video, I talked about like how nobody has really got players like NIO, but also XPeng and so on their agenda right now, which have, in the case of NIO, the first 5 nanometer chip in production, in mass production, and in a car that has more than 1,000 tops, and that's 10x than Tesla's hardware 3. It's more than Tesla's hardware 4 as well, which is around 150 or something like that. So Tesla talking AI chips coming, but it's maybe in 1 or 2 years, and NIO has it in their cars already and doing lots of exciting things with them as well. So, but yeah, NIO also needing to reinvent itself. One part of that is restructuring. One part of that is making a more lean organization. Now we see the evidence with this earnings report. I think the first evidence. I think obviously everybody looking for Q4, which should see much more evidence of that, and possibly the break even. And I think we're on a good way for that. It's going to be very, very tight, especially with such lower guidance. So my best guess is guidance lower, we some sort get between the 120 to 130, somewhere that type of a volume. But we will see again higher average sales prices and higher margins, and with the right cost cutting and maybe a little bit of a R&D tech research fees on the other services level help push us into profitability. I think that's a realistic case. I think that might happen. And I think that's totally realistic based on the current report of today. And so I say the report today is really, really pretty good. Yeah, let's see if there's some questions, or whether or not I expect surprises during the earnings call. I guess the surprise that we have gotten here is with this, and Lieben certainly needs to talk about that, is why they are thinking of only getting to those 120K. Let's go back here to my Excel sheet. I mean, obviously that's definitely staying where we are in terms of November and December. Would be roughly come in at 40K as well. So no improvement. I think in a sense that's a little bit unlikely. Doesn't make much sense to me, because December usually is much, much higher. So either they're down already a little bit in November currently due to some issues and need to make up for that in December, or they are sandbagging with those numbers. I don't know. Maybe that's something which might be surprising to hear in the earnings call, if they may surprise us with some operational difficulties that are having with ramping up production or so on, or it has to do with what I've mentioned before, with models being postponed into 2026, relaunches and launches, like the ES9 and stuff like that. I don't know. That's the only thing I could think of. Do they have issues with supplies? I don't know. It's really tough to ramp up the way they're trying to do. So that has always been my precaution on these Q4 numbers as well, why I had them at 128. Not getting too excited about before NIO was pointing us even to 150, because the reality is, you see it with the Nexperia case. If you just got one tiny chip missing, you cannot finish the car, right? So it's hugely complex, and if they announce something like today, it would make sense. But like saying that they are slower in ramping than they initially thought because of some supply chain constraints, but It doesn't have to be the case. It doesn't have to. Good idea. Maybe NT2 cars harder to sell. Not so sure. I think they've been remarkably steady. So yeah, could be. But then this could be totally being made, substituted with higher Onvo sales, for example. So yeah, I don't think that's the main case. Let's see. Right. I think the earnings call is already coming up in 10 minutes, isn't it? So for me, I may have to jump over to the actual call and do the second live stream. Yep, 10 minutes. Okay, guys, I guess I need to finish up and wrap up the stream here and see you in the other stream. Or should I just keep this one ongoing? No, I'll make another stream. See you over there in a second.